Good morning, everyone. Thanks for attending Congressman Perlmutter's Small Business Roundtable this morning. We have actually just been joined by Congressman Perlmutter, so I'll let him take it away here and then we'll get started with our panelists.
Good morning, everybody. We got a great panel again. I just want to thank Ron Sr. and Francis Padilla and Anthony Needy for helping again. I appreciate this. I'm scrambling from one thing to another, so I want to apologize for that. We've got a committee hearing on the big COVID package, which will help in many ways the small business community. And we can talk about that a little bit, but there is substantial help to restaurants, to the leisure industry, hotels, et cetera, as well as small businesses. Generally, there's assistance for housing and unemployment, and there's a pandemic payment. Anyway, it's a big piece of legislation we're working on right now. Colorado has another bill that's up in a few minutes on wilderness and public lands, preserving wilderness, Colorado, and I will be presiding over the House of Representatives as part of that. So anyway, long story short, I got South Table Mountain behind me. That's what that painting is. And it's good to see everybody as part of this program. And, you know, obviously this last year has been a rough one for a lot of people. And both in terms of their physical health and their financial health. And we are working hard with the Biden administration to correct that. And there is this piece of legislation that is going to be voted on today in the House of Representatives. And then we'll move to the Senate. That is a major package to really get everybody back on their feet, get the vaccines developed, produced, and distributed as quickly as possible, then with these other economic components. So once we've crushed the virus, then we can really get the economy moving, and that's the purpose of the bill. I just am very happy that we've gotten such a good response to this roundtable that we're doing. I know that we have experts to assist you all with respect to the, you know, how things will be available to the small business community. For those that are working with the chambers of commerce, there will be assistance at that level as well. That's something that we corrected in the last go round. It is part of the package, the American Rescue Plan that we have going forward. So I am going to be coming in and out because I have these other obligations, the committee meeting and then the wilderness bill on the floor. And just so you know, the two prime sponsors of the wilderness legislation are Diana DeGette and Joe Neguse. And much of the bill is dedicated to Colorado wilderness, but wilderness all across the country. So Ashley, I don't know what else you want me to talk about. It's a nice day here in DC. We're supposed to get the storm that hit Colorado yesterday. We're supposed to get it tonight and tomorrow. So I'm looking forward to that.
Thanks, Ed. I think we can just kick it off to our panelists. Maybe we'll go around and do a brief introduction of our three panelists. So we have Francis Padilla, the Colorado District Director for SBA, Tony Needy, partner in Reuben Brown's Tax Services Group, and Ron Senior, managing partner at Senior Gustafson. So maybe in that order, we'll go around and just introduce yourself, and then we'll get started with the presentation.
You did a great job. I'm Francis Padilla. I'm the District Director of the U.S. Small Business Administration, and I serve the entire geographic space of Colorado District. However, I am a resident of CD7, so it's always an extra pleasure to serve this district.
My name is Tony Needy. Yeah, I'm the partner in charge of Reuben Brown's National Tax Group. I also cover tax policy for Forbes and Forbes.com. So I'm keeping a close eye on the votes that are happening today, obviously, and have a vested interest in understanding some of the benefits that are coming out of this latest round of relief. And then I teach at the University of Denver's Law School, the graduate tax program, but I live 3 hours west of Denver, up in the mountains in a town called Basalt, about 10 minutes outside of Aspen, Colorado. And we would be happy to get some of that snow that's coming DC's way, because it's been pretty dry here for the last couple of weeks.
I'm Ron Senior. I'm managing partner Senior Gustafson in Lakewood. I live in CD7 on Green Mountain. Have since 1980. We have been working hard to sort out all the mechanics of these benefits that are flowing through the small businesses and individuals. I'll tell you one thing about the snow. We got all the snow, but it just evaporates. We need some of it to run off into the watershed, because it just seems like it goes back up into the atmosphere. But with that, I'll turn it back to Ashley.
So Ash, let me just give the top line, Tony, so you can know precisely what we're looking at as we vote on it in this committee and then vote on it on the floor. But the top line of the rescue plan will be $1,400 in direct payments to individuals and dependents, depending on their income level. But for a single filer, it's $75,000. For two filers, it's $150,000. And then over that, it steps down. We will extend the pandemic unemployment program. There will be tax credits for families and for employers who offer paid leave. $350 billion for state and local government aid. And Colorado is one of the states that's been hit the hardest in terms of the economy, because we have two things that were hit during this period of time: our energy industry and our leisure industry. So our hotels, our restaurants, et cetera. And because of that, we've had tax revenue fall off, and we've had to lay off a bunch of people from local governments and state governments. There will be $60 billion for COVID testing and vaccine activities. So more testing, and obviously continued development of the vaccines and production and distribution. There will be a substantial amount, $40 billion in rental assistance and mortgage assistance, so that those folks who've been laid off, and everybody should realize, and Colorado certainly has experienced this, from last year to today, we've lost 10 million jobs. So there are a lot of people that are unemployed, and we want to assist them with their rental and housing assistance. There is $130 billion to support K through 12 and $40 billion for higher education. There is an effort to increase the minimum wage to $15 per hour, stepped up over the next 5 years, but apparently the Senate probably will not take that up. And there will be subsidies to assist people who want to purchase health insurance under the Affordable Care Act. So those are the big items in this bill. And I expect it will pass sometime tonight, and we will send it on to the Senate tonight or tomorrow. Okay, I gotta go vote now. And it's good to see everybody. Thank you all very much. Francis, Tony, Ron, thanks for participating in this and helping these businesses and associations in the 7th CD.
Thanks, Ed.
Good.
See y'all.
For those of you who might have joined late, welcome to Congressman Perlmutter's Small Business Roundtable. We're joined by 3 experts this morning: Francis Padilla, Colorado District Director for SBA; Tony Nitti, partner in Reuben Brown's Tax Services Group; and Ron Senior, managing partner at Senior Gustafson. So if you have questions this morning, please go ahead and put them in the Q&A. We will try to get to as many questions as possible, and we'll also send a follow-up email with the slide decks and other information after this event. So with that, we'll go ahead and get started with Francis Padilla. Francis, I will go ahead and share your slide deck here.
Great.
And just let me know when I can turn the page.
Awesome. All right. So thank you so much for this opportunity to talk a little bit about some of the incentives and the programs that were either authorized or extended under the Economic Aid Act that was passed and signed into law at the end of September. Ashley, if you just want to go ahead and do one more for me. This is a great slide reminding me that every program that's authorized is incredibly fluid, and especially those that were discussed under the CARES Act and authorized or reauthorized again under the Economic Aid Act, and where we are changed from even when I submitted this slide deck to the Congressman's office, because as you know, we had a huge announcement this week that was made by the Biden-Harris administration, SBA, and the Treasury about different PPP reforms. So as I go through some of the top line incentives here, I'm going to try to cover some of those reforms a little bit and scratch the surface. But like I said, I'm always available to come back in front of any group, any roundtable, any association. My district office is open to any of the constituents in Colorado who want to ask questions. So let's just kind of cover some of the programs at maybe a 30,000 foot level overview. And then what we'll do is take some questions at the end. Ashley? All right, so the two flavors that were impacted in SBA programs really come to our loan programs and then our grant programs. And we did have a lot of changes in incentives that were authorized to some of our core programs. Today, I'm going to focus on disaster assistance, but if we have some time at the end, I might be able to cover a little bit about our core programs. So today, we're going to cover Paycheck Protection Program 3.0, that's what we call it. Then we'll talk a little bit about what was called Section 112 debt relief under the CARES Act, where it's debt relief for 7A 504 community advantage and micro loans going forward. I'll touch on the COVID-19 EIDL long-term loan program, and then the new targeted EIDL advances that came out of the Economic Aid Act, and then touch a little bit on Shuttered Venue Operator Grant, which is a brand new grant program that was authorized for SBA to administer under the Economic Aid Act. Next. All right, I think we all know a lot about PPP after experiencing it over the last year, but I do want to talk a little bit about some of the changes to PPP that happened under the Economic Aid Act. So one major thing is that PPP's eligibility in terms of who can access the funds and then how the funds can be used changed. I'm going to cover a little bit this in more detail in the next slides, but as an overview, one thing that changed is instead of just having an 8-week period, or after the second round of PPP changes a 24-week period, now any borrower can select any cover period between 8 weeks and 24 weeks. That's for both an original first draw loan, so if you've never taken out a PPP loan, or if you're coming back in for a second draw loan. And again, we'll discuss that in more detail. If you did have a first draw PPP and you're still experiencing injury, and you can prove that you had a reduction in revenues of at least 25% from a prior period, you can come back to the SBA and ask for now a second draw loan, and we'll talk a little bit about that. I know we have some tax experts, so I'm not going to cover much on the deduction of expenses. I'm going to leave that for those experts, but I do want you to know that we did fix some issues with deductibility and also what counts as gross income for a PPP forgivable loan. Also, we've updated and simplified a lot of our application and our forgiveness process. So if you do have a loan up to $150, and actually might even be lower in the next week, which would be up to $50,000, we have a simplified application form. The one thing I'll let you know is that every PPP lender takes their own applications their way. They're only required to gather the same data that we ask them to gather, but you can start by looking at our application forms so that you can put your information together and be ready to apply in whatever way, whether it's electronically or through paper, that your PPP lender uses. And then also the Economic Aid Act fixed one little glitch in that if you had an EIDL advance, then it was counting against the amount that was forgivable for PPP. That's no longer the case. And if you already applied for forgiveness, we're going to make you whole on that. Okay. All right, so what's a first draw loan? So PPPs are now in two different flavors as well, a first draw loan and a second draw loan. So these are for those folks that did not take advantage of PPP in the first round through August, you can now apply for a first draw of a PPP loan. We've added additional entities, including marketing destination organizations, some 501c6s, as long as they're not materially using their funds or getting funds for lobbying or political activities, and also some housing cooperatives. The covered eligible expenses, as I mentioned, are now expanded. So what the Economic Aid Act did is went back to the definition of payroll and said, okay, if you are offering additional benefits or different types of insurance, those now count as payroll. And then we also expanded the definition of what you can spend in operational expenses. So if you're trying to maximize PPP forgiveness, then what you would do is you would try to spend 60%, at least 60% on eligible payroll expenses. And then you had a little bit of a cushion of 40% to be able to spend on other operational expenses. In the first round under the CARES Act, you were limited to things like mortgage, interest, utilities. Now under the Economic Aid Act, you can spend it on other types of eligible expenses that are operationally based. If you had to retool your space because of COVID, if you had to buy PPE for your workers, other types of supplier costs. So those count as eligible under that 40% cushion of operational expenses. We already talked about the covered period. There's still a requirement that you had to have been in operation as of February 15th, 2020. And there is a deadline to apply, and that's March 31st, 2021. Next. All right, we talked a little bit about the expanded loan eligibility. Here it is in the slide: housing co-ops, marketing organizations, 501c6s. I did forget some eligible news organizations. The people that are still eligible is the same list as before: all small businesses that meet the size definition, nonprofits, veteran organization, tribal businesses, and some churches. All right, second draw. So second draw are new loans that if you already received a PPP loan and you fully expended the funds and you suffered a reduction in gross receipts of 25% from a historical period, you can come back to the SBA and ask for a second draw. For most borrowers, the way you calculate the loan would be based again on average monthly payroll expenses times 2.5. What the Economic Aid Act did do is recognize that some of our hardest hit industries were those that Congressman talked about: the accommodation, food services, restaurants, etc. So there's a new calculation for any industry code that starts with 72. So if your NAICS code starts with 72, you can actually do a calculation of the average monthly payroll expenses times 3.5. So your loan amount would be a little bit higher. The maximum to any one borrower is $2 million. If you're in the NAICS code 72, you can do just like you did in the first round, have multiple restaurants that have separate EINs and separate locations apply for PPP, but the maximum to any one corporate group is $4 million. And then we have a new application form. So please know that there's a distinction between doing a first draw and a second draw. If you're doing a second draw, you're going to use the 2483 SD, standing for second draw. All right, next. So here's the process. The first thing, obviously, is you want to find a PPP lender. If you're already working with an organization that did your first PPP loan, you can work with them again for your second PPP loan, although you don't have to. If you'd like to change lenders, you can. There are some nuances that you should be mindful of if you do change your lenders, and in that your first draw information needs to match your second draw information when your second lender goes in to enter it. If not, it causes some little kind of glitches in the validation. Just be prepared. I don't want you to feel discouraged if your lender comes back and says we need additional information. It's just that the system is validating against the first draw. And it is much smoother if your first lender does the second loan, obviously. But if not, that's okay. We've given lenders instructions on how to work through those situations. If you don't know how to find a lender, we do have an online tool. It's called Lender Match, and it has been completely, totally coded to just take inquiries for PPP clients right now. So if you go to sba.gov/lender match, you're going to answer about 11 to 13 questions, and then it will try to match you to a PPP lender throughout the nation. So these lenders opt into the system. Sometimes they define a geographic area, like they say, we're only looking at clients in Colorado, or we're only looking at clients in Jeffco. Some of them say we'll take clients from anywhere in the nation. So those lenders have 2 business days to reply back to you to see if they're interested in doing your loan. So that's an alternative. They will walk you through their application. Like I said, they're going to use their own application process, but you're welcome to look at our forms online. And by the way, everything is found at www.sba.gov.ppp or /PPP. And you don't have to memorize all of this. I think I did a slide at the end where you can stay connected with us. But that's where you would pull forms, information, guidelines, fact sheets, etc. So what happens is you make application to your lender, the lender and makes application to SBA. We have a brand new application portal. It's a little different from our last system. So there is more of a time lag between when the lender submits the application and when there's an approval, because we have to balance, speed and expediency with due diligence and making sure that, we're preventing as much fraud as possible. There's a validation process that happens. So the information is entered, and then it takes a few days to make sure that we're validating against a lot of different third-party information, such as you can't be debarred from doing business with the federal government. You can't be delinquent on other federal debt, those kinds of things. So it's checking against those, and then it gives a decision back to the lender, or it tells them, here are some things we need you to work on with the borrower. And then the decision is put into the portal, and the lender advises you that you've been funded. So that's how you would know. A couple of things that changed this week under the announcement to PPP reform is that for a 14-day period, we've announced what's called an exclusivity processing period. These are for those clients that have 20 or less employees. So what we're doing is we're giving a 14-day period unfettered access to be able to apply for PPP. So if your business has more than 20 employees and you already applied, we're going to continue processing those. But if you're a little bit larger and you haven't submitted the application, it will be after that 14-day period. So what we're really trying to do is make sure that the smaller businesses have equitable access to the relief. So from Wednesday of this week through March 9th, they will have an exclusive period to apply. Next. On second draws, I think you can. Oh, if you, for some reason, you do not maximize forgiveness, which means you didn't spend all of the money, 60% on payroll expenses and 40% on eligible operational expenses, then this would be a low cost, low interest, long-term loan. So the terms and conditions for that would be, it would be 1% non-compounding, non-adjustable. We are not going to ask you for an additional collateral or a personal guarantee. You will not be charged an SBA fee, and the lenders will not charge you fees. The way the lenders get their fees are from SBA based on the amount. The maturity would be a 5-year maturity for any new loans. Payments you would actually get a deferment period if you actually do have a payable amount. We would ask you to apply for forgiveness within at least 10 months after your covered period. Okay, next. A little bit on forgiveness. As I already mentioned, we're going to make you whole if idle advance was counted against your forgiveness in the first round. And I know, again, the experts on this panel today are going to talk about the IRS and the tax issues, but I do want to remind you that forgivable expenses are permissible, that you can do a new simplified form for forgiveness. And if you have any issues with forgiveness, you actually apply through your lender for that. If you have any issues with forgiveness, or if you your lender is not taking forgiveness applications and you're getting a little bit concerned about butting up against that window, please do contact my office. We do have a way to report those concerns. So the best way to do that is send an email to our email box, and it'll be at the end of the slides, but it's coloradodo@sba.gov. All right, lots and lots to talk about, I know. I do want to remind you that the Economic Aid Act and an SBA administrative decision extended the period for when you can apply for the COVID-19 EIDL long-term loan. So these are loans that will help you bridge in the interim if you couldn't make working capital expenditures because of COVID. It is a loan not for for-profits, it would be 3.75%. For nonprofits, 2.75%. You can spend it on a whole lot of expanded things that you really couldn't spend PPP on. We can take applications from small businesses, co-ops, ag enterprises, as long as you meet the definition of small, which for that program is under 500. Next. Economic Aid Act actually authorized a new targeted EIDL advance. I know many of you may be familiar with the EIDL advance that happened under the CARES Act. This is completely and totally different. So the way this is going to work is if you had an EIDL advance under CARES Act and you were given an amount that was based on $1,000 per employee, what we're doing is going back and inviting you back into the portal to try to make you whole up to that $10,000, because that really was the intention of Congress. So you can't apply. SBA is actually doing this by invitation. They'll go back through their records, see who got an amount between 1,000 and 9,000, invite you to come back into the portal and submit some information, but you do have to meet the definition of targeted that was defined under the Economic Aid Act. So these would be location in, and this is the business location in a low-income community. We did add a mapping tool last week, so you can go in there and enter your address and find out if you are in the low income community. You basically come up in a purple area. If it's purple, you're in a low income community. You also have to prove that you suffered greater than 30% economic loss based on your gross receipts. And then you also have to meet the definition of small, which would be 300 or fewer employees at this time. So once you get that email from an email at sba.gov, so be mindful of any of those phishing scams, etc. You will get an email if you're invited back in, and it will start with something at sba.gov. Fill out the paperwork, assume your portal, and then it'll give you an application so you can start answering the questions. So that's first priority for EIDL advances. Second priority for EIDL advances will be those that went into the portal last year through December 27th and made application for an EIDL loan, but you did not have the ability to ask for the EIDL advance, that $10,000 grant, because we had run out of money. So you will be in the second priority. Same process will happen. SBA will send an invitation to you, ask you to claim your portal, and then submit all of the information. So it's a 21-day decision period. Please, please, please check all of your answers 3 times, because we aren't going to have a waiver system and we're not going to have an appeal system. So you want to be sure what you're submitting is accurate and that it can be verified on your business. And again, you need to meet the definition of targeted as well. Okay, next. I think we talked a little bit about getting an application, but these are the kinds of things that you will be asked if you're invited back in for an EIDL advance. You need to have your 2019 taxes done. You need to check your EIN and your SSN and make sure that that matches up. We're going to look at your monthly gross 30% reduction calculation from 2019 and 2020. And then we're also going to look at year to date in 2021. And we're going to take an 8-week period and see if you had a reduction of 30%, 8 weeks to 8 weeks. And then we're going to ask you to sign a 4506T. That's authorizing SBA to go to the IRS directly and get your tax transcripts. Next.
Okay, and Frances, we have about 2 or 3 more minutes left.
Okay, that's fine. You can kind of go through this. It just kind of, we'll have the slides available to you. All right, let me just hit this really quickly because this is the new grant program. This is not opened yet, but you will have to do some pre-steps, so I want you to be aware of it. This was authorized for live venue operators, promoters, theatrical producers, museums, talent reps. And if you experience a significant loss of at least 25% or more, then you can't apply. You had to have been in business as of February 29th. This is actually a grant, and it's going to be based on the revenues, 45% of your revenues for the prior year. We haven't opened the application yet. The way that you can find out more information is to go to our website. There's a great FAQ on there, and you can walk through the eligibility to see if you're one of the entities that can apply. And then the pre-work would be you would have to sign up and register in SAM, which is the System for Awards Management. And there's a new tutorial that was posted this week on there. So you can walk through that tutorial and do the pre-steps if you think you're going to apply for SVOG. The one thing I would say is you cannot apply for both PPP and for the Shutter Venue Operators Grant. So you need to make that decision on which program you're going to go with, right? This is just so you can kind of look at whether you do PPP, SVOG, or EIDL. And this is available on our website. It's called the cross-program eligibility. Next. We can talk at another time about loan debt relief, but in essence, we were making principal and interest payments on behalf of current SBA borrowers last year under the CARES Act. We're going to extend some of that. We've just changed the number of months that we will be extending those payments. If you can go on our website, you will see if you were 7A client, 504 client, microloan client, or community advantage client, whether or not you're going to get additional payments made on your behalf and in what amounts and in what increments. You don't have to do anything. Your lenders are taking care of this, but like I said, it's good information so that you will know if you're getting an additional 2 months, an additional 5 months. Thank you for that. We just kind of covered these. If you want to go and scroll to one more. I want to remind you that you don't have to do this alone. We have a ton of funded partners across the state that can help you. We have 15 small business development centers that we're partners in. We have a women's business center at Mikasa Resources and 2 SCORE chapters. So this is how you get a hold of them. They do free counseling, technical assistance, mentoring, and training for you. You can also call the state's Business Navigator hotline for any questions on our programs, state programs, or even unemployment. And this is how you find us. So I think that's it.
Great, thank you, Frances. And as a reminder, we will be sending out these slide decks in a follow-up email after this presentation. So with that, we'll go to Tony.
Thanks so much. Yeah, Ashley, that was a lot of great information there from Frances. So am I sharing my own screen then, Ashley?
If you can, if not, I can do it for you.
No, I definitely can. Yeah,
okay.
That's 100% fine. Just wanted to make sure because I saw you were driving for Frances. So in my minutes here, what I want to do is really cherry pick some of the topics that Frances brought to our attention and really focus on them from a tax perspective. And the first thing I'm going to do, right, might seem a little bit counterintuitive since we're here primarily to talk about the PPP. But what I am going to tell you is that from my perspective, really the biggest change in recent legislation impacting PPP borrowers doesn't really have to do with the PPP. And what I'm referring to here is if you remember back to the CARES Act, when it was passed in March, there were 2 primary incentives for small business owners to keep their people on staff and keep them paid. There were the PPP loans, obviously, but then there was also something called the Employee Retention Credit. And it was a payroll tax credit that, again, you could claim as a reduction in your payroll taxes, get a refund for those amounts. The thing is, they were mutually exclusive options. If you took out a PPP loan, you could not claim the employee retention credit. And so we all know that generally speaking, anybody who could take out a PPP loan for the most part did. And so we didn't really care a whole lot about this employee retention credit. But what happened the end of December, right, with the Consolidated Appropriations Act, is Congress retroactively made the employee retention credit available to anybody who borrowed a PPP loan. And I can't stress enough, a big big deal this is, right? Because it is very rare that Congress, like I said, retroactively opens up a door that allows millions of business owners to claim tax benefits that previously were closed to them. And so it's really incumbent upon anybody who borrowed a PPP loan before they apply for forgiveness. And I know we're here to learn today about applying for forgiveness, but before you apply, to go back to 2020 and kick the tires on this employee retention credit. And I'll just give you the briefest of backgrounds, but basically you have to look at all 4 calendar quarters for 2020 and just see if any quarter is eligible for this credit. And to be eligible, either during the quarter, your business needed to be fully or partially suspended by government order. So any restaurant, bar, hotel is probably going to qualify. And failing that, even if you didn't get shut down, so to speak, or even if you only got shut down for a brief period, if in any quarter in 2020, your gross receipts dropped by more than 50% compared to the same quarter in 2019, you're eligible for this credit. Now, how significant can that credit be? I just did a calculation for a client this morning, a small little sandwich shop located in Aspen that took out a $60,000 PPP loan. Well, we went back to 2020, computed the employee retention credit, and it's another $48,000. So it's an incentive that's almost equal to that PPP loan. And so we have to go back. And now you could say, well, Tony, why do we have to go back before we apply for PPP forgiveness? And it's because, think about it, right? PPP forgiveness, as Francis just said, large part of that, 60% of it is predicated on payroll costs, W-2 wages that you paid. Well, guess what? This employee retention credit is also driven by payroll costs. And while they will now allow you to take both benefits, the PPP and the employee retention credit, what they won't let you do is take the same benefits on the same W-2 dollars. And so you have to go back to 2020 and go through the exercise I went through this morning and basically add up all your W-2 wages that are both PPP eligible and ERC eligible and just divvy them up to maximize the 2 benefits. But you don't want to leave any benefits on the table. And so going through this for 2020 before you apply for forgiveness is critical because, like I said, you can't double up the costs. You have to push some costs to the employee retention credit and then enough cost to the PPP to get your full forgiveness. What that should mean to you, if you're listening, right, is that we know, like Francis said, 40% of your PPP forgiveness can be attributable to non-payroll costs like rent, mortgage, interest, and utilities. You're going to want to maximize that 40% because the more you can keep payroll costs out of PPP, if you're eligible for the employee retention credit, you can push to that credit and maximize both benefits. And then I need you to know that that employee retention credit was brought back for 2021. It was originally going to expire at the end of 2020, but now it's here for 2021 and it's significantly more beneficial. We are talking about potential huge credits for what is now the first half of 2021. It is possible that this round of legislation that Congressman Perlmutter is going through right now will extend that until the end of the year. But that means the same math has to be done in 2021, right? Allocating between ERC and PPP and maximizing both benefits. Okay, so these couple slides just talked about exactly that process. Then I want to drill in to something Francis mentioned that's really important, right? Really kind of the headliner of the legislation that was passed at the end of December. Congress with the PPP. So if you're in a place where you're looking to apply for forgiveness, you're cranking out your 2020 tax returns right now. Yes, right, we get to have our cake and eat it too. Congress is letting us do that. And what I mean is the PPP funds, when forgiven, we know are completely tax-free, but now they're telling us we get a second bite of the apple and any expenses paid with those PPP funds are fully deductible. There was about an 8-month period there where the IRS drew a line in the sand and said, you can have your tax exempt income, but you can't deduct the expenses paid with PPP funds. That is no longer the case. And so it's very rare in tax world that we get both sides of that benefit, tax exempt income and deductible expenses paid with that income, but here we are. So make sure you're aware of that. For any of you who operate as S corporations or partnerships, you may be aware of a tax concept where you need basis in the S corp or partnership in order to deduct losses or take distributions tax-free. And your basis is increased by tax exempt income. And so one of the critical questions that's floating around tax world right now is for an S corp shareholder or a partner in a partnership, when do you get to increase basis for this PPP tax exempt income? Is it not until the PPP loan is forgiven, which would probably be in 2021, obviously, or is it when the loan was received in 2020? And there's no smoking gun answer to that. Anybody that's interested, in my opinion, you can ask away in the Q&A and I'll address it. But again, every firm, every accountant's pretty much taking their own position on that based on the relevant law. So that is, again, the headliner. And then I just want to drill in for a second on one final thing Francis said. We know that when we apply for forgiveness, at least 60% of the total forgiveness has to be attributable to payroll costs, but we do have this 40% that can be attributable to non-payroll costs. And as I said, if you're eligible for the employee retention credit, you're going to want to maximize that 40% so you can push more payroll costs to the ERC. Well, that 40% used to just be comprised of mortgage, interest, rent, and utilities. But as Francis mentioned, I just wanted to give you a little more information on it. We do have 4 new batches of non-payroll costs. And listen, they're not going to apply to everybody, but to the ones they apply to, they could be significant. Covered operations expenditures. So any payments for business software or cloud computing services that do a wide range of things, right? Facilitates business operations or product delivery or running HR, sales and billing functions. That's pretty broad. You know, someone asked me the other day, do you have to prove that you only incurred these expenses because of COVID? And there's nothing in the legislation that would require that. Property damage, if your property was damaged from protests or looting during the summer, they're allowing you to do that and have those costs be eligible for forgiveness. Francis had mentioned if you have a contract with a supplier of goods that was in place at the time you entered your covered period, those supplier payments basically are eligible for forgiveness. That again can be a very lucrative category if you're eligible. And then we have this broad category of covered worker protection, where, as we said, anything you had to do to protect your workers to comply with kind of COVID guidance, whether it's putting up a sneeze guard or things in front of the checkout aisle at the grocery store to protect the workers, those types of expenses are now eligible as well. And people keep saying, well, what do these expenses mean? Like, where are the real detailed definitions? I don't know that they're coming necessarily because, we have a way to limit any abuses with those 4 categories and the 7 in total that are non-payroll costs, because as I said, they're limited to 40% of total forgiveness. And so I know there's probably more areas of interest here, but I want to make sure Ron has plenty of time to discuss PPP2. I'm going to throw it over to Ron, and then I'm going to be here to answer any questions you have about PPP, ERC, PPP, ERC interplay, whatever it may be.
Okay, let me get my slides up. There we go. I'm really happy that Tony talked about the employee retention credit. In our shop, our CPA shop, we've been so focused over the last few weeks and months on the Paycheck Protection Program and how to qualify and helping our clients, first apply and then figure out the forgiveness and everything related to that. And as Tony mentioned, it's incredible that Congress clarified the double benefit of you get tax deductions if you properly spend the proceeds on the right items, and the loan is forgiven on a tax-free basis, which is very unique in tax law. And I really just also wanted to emphasize his point about pushing as much of the expenses to the 40% category, because and I'm not going to go into the employee retention credit like Tony did, but pay attention to it, because it's the credit is a refundable tax credit against employment taxes up to 50% of qualified wages. So it becomes a very significant amount that we'd kind of all of a sudden it popped back on our radar going, wait a minute, and as Tony said, it's been extended through the first half of this year. So and just I see in the Q&A in the chat that our slides are going to be made available to you, and we have some additional resources that will extend what we're able to cover here. I'm going to talk more about the Paycheck Protection Program in round 2 that we call PPP2. I know Francis, I think, referred to as PPP 3.0. So maybe we've moved beyond 2.0 to 3.0. But in any event, the recent legislation extended the PPP loan program and broadened it a bit to allow some additional nonprofits and others to apply. And it's funded through March 31 of this year, or when the funds run out. So the process is, is underway in terms of submitting applications. And I know there's been some Q&A questions that I'm going to go quickly through this so we have some time for those. And some of this is a little redundant on particularly what Francis has already covered, but it's important stuff. That the new second draw program is for smaller companies, relatively smaller than the first one, 300 employees. It's expanded for the if you have a business code in the hospitality, leisure, hotel industry, you get an expanded calculation of how much you can apply for. But you have to meet the test of, has your revenue dropped in a quarter of 2020 in relation to 2019? And there's a document that we will get out to everyone that it's a 19-page Q&A that I have in my hand here that was issued on January 19 that gives a lot of the mechanics of how do you compute the drop in revenue? What is revenue? What isn't revenue? What do you do if you're not in business for a full year? What kind of information do you need to include when you submit your application? And so that information I'm sure that Ashley and her team will be able to get that up on the Congressman's website so you can get that, or they'll email it out to you. Who's eligible for a second loan? You have to have met the criteria to be eligible for a first loan, even if you didn't apply for one. There's certain, and I'm not going to go through all these. You can't apply if you're, doing business in China and certain things like that. You can't apply if you're a public company, and you can't apply if you permanently closed your business. So if COVID, unfortunately, you pull up the tent stakes and you're out of business, it is not available to you as a resource. It's for those that are able to continue. And I'm going through this very quickly. I know, just because we've got limited time. There are 3 different forms that are used to submit for the forgiveness, together with the supporting documentation that is outlined, I said, in the 19-page Q&A. And there's a simplified, it's called Form 3508S. If you have 150,000 or less in a PPP loan, it's a 1-page form. It requires a lot fewer calculations. The 3508 form is the one for if you have a larger loan, ask more questions, requires more documentation. And then there's an EZ form that you can also use if you meet certain criteria. So they've tried to kind of streamline the process. And kudos to the Small Business Administration, because they've processed more PPP loans. I don't know the exact statistics, Francis probably does, but they've processed more loans in the last year than they have in the last 15 or 20 years. And they have limited resources. And so a lot of it's been coordination with the SBA lenders and banks that have been working nonstop to get through the process on behalf of SBA, following their guidelines. I have a good friend that's a banker here at First Bank in Congressman Perlmutter's district, and they've really worked hard to try to fulfill the process as kind of the lending arm for the applications and the forgiveness applications. This is a quick summary that covers some of the things that Francis covered in a couple of her slides. But it's I guess the one takeaway for me is, if it isn't forgiven, you still end up with a 1% 5-year, non-collateralized, non-personally guaranteed loan. So it's not necessarily a bad thing if you get the funds and you have properly applied and received the funds, but if for some reason you didn't use them properly for forgivable activities, you know, it's a pretty decent lending rate with no fees and that type of thing as discussed. I think this talks about, you know, what was already covered, that, you know, the EIDL grant, you know, was originally, if you had that, you had to reduce your PPP loan by the amount of the EIDL grant. Now that's been clarified that no, and they're going to even go back. And I just learned that today. And if you didn't get the full 10,000 and you applied for it, they're going to look through that paperwork and they'll contact you if you're eligible for some additional funds, and it doesn't reduce the PPP funding on the other hand. There are certain things that aren't included in payroll costs, and I'm not going to go through all of these, but certain things that if you've paid, you know, large commissions, you know, that you need to make sure that you understand kind of what's payroll, what's non-payroll. As Tony indicated, they've expanded the definition in the second round of the PPP2 in terms of what is qualified payroll and what's qualified other costs. So make sure that you're, you know, understanding those or working with the professionals that understand. Here's one item on this slide that I think is important because we've had it come up in our practice, is that if you're running a business and you're trying to figure out your payroll that, you know, you want to use for forgivable costs, you can't include amounts paid to independent contractors. So if you are employing gig workers, and we have some of those in our shop that we pay independent contractors, and we think they qualify as independent contractors. That's a whole discussion for another day. They independently could apply for PPP loans as an independent contractor because they are essentially in their own business. So you have to watch out for those types of compensation payments that you may have in your business or your restaurant or your, you know, whatever your enterprise is that you're running. So be aware of that. This is just a busy slide, but it kind of emphasizes a point that Tony touched on, the basis issue. The forgivable aspect of PPP loans wasn't technically passed until in early January. So if you're a flow-through entity like an S Corp or a partnership, you may have some basis limitations on being able to deduct the use of PPP proceeds if you don't have sufficient tax basis. That's beyond what we can discuss today, but it's just one of those things that you need to work with a competent tax professional to make sure that you've got your basis issues covered if you're a flow-through entity in that respect. This is just clarifies what we've already talked about, that you can get an EIDL loan and a PPP loan. So that's kind of was not clear initially. So that's been cleared up, and that concludes my run through the slides. So I know we've got some Q&A. So hopefully we can call a few of those up.
Thank you. Yes. Thank you, Ron, Tony, Francis, for all of that very, very valuable, important information. Again, all of those slide decks will be made available in an email out to folks after the event. I know we have a web page on our site, perlmutter.house.gov, where this information will also be posted. But in the follow-up email, it will have contact information and website links and all of that. So you will get all of this information after the event. We have a couple minutes left, so let's try to get to a couple questions that were pre-submitted. So maybe this one is for Francis. Currently, there's a 2-week pause for PPP loans for businesses with more than 10 employees. Does this pause affect existing applications, or is the pause just for new applications?
So the exclusivity period, as we're calling it, actually is 20 employees or more. And if you already have a loan in the system and there are error codes or hold codes, we're not going to stop working on those. Those are still going through the system. It's for any new applications.
Okay, great. If the amount of forgiveness for the first round of PPP is less than what was expected, how should business owners work with their lender and the SBA to appeal the decision?
So it's probably a good idea to kind of explain the process because we do get a little confused on this. So what happens is you make application, the lender reviews it, and they have to either agree or disagree. They submit their agreement or their disagreement to SBA. SBA reviews it. SBA could come back and say, we agree or disagree with you, lender. If there's a disagreement between all of those parties and the lender informs the client that this is the balance, the lender can submit back to the SBA and say, we want another review. After that happens, if SBA upholds its decision, then the lender has the borrower has appeal rights, and we can make sure that you have that, but you would actually send a formal appeal to a body we call OHA. And then you would have to include all the information to overcome the reason for the appeal.
Okay, thank you. And Ron and Tony, if you guys have anything to add on any of these questions, feel free to jump in.
I'll jump in on one, Ashley, that I saw. There was a question about if you got PPP funds and put them in a specific segregated account, but then paid for qualifying expenses out of another account, is that acceptable? And it is. So there was initially, it was like, well, if you get a loan, and we even told our clients, you might want to open a separate account and try to keep track of how you use those funds. But there isn't a specific rule that, at least that I'm aware of, that, if you have qualified funds that you spent, they're qualified regardless of if they came out of the same enterprise account. They have to be related to the same business, but they don't need to be within the same bank account.
Okay.
And I responded to that online as well. So.
Oh, okay.
Great. Yeah, I appreciate you guys responding real time. And I should note that anyone who has pre-submitted a question or submitted a question during the event in the Q&A, we will follow up with you to get you a response and the information you need. So next question, can you have a default on student loans and be eligible for the PPP?
That's a great, timely question, because I think just this week you may have heard what the Biden-Harris administration announced, that we are expanding eligibility for those who may have been delinquent on student debt. That's one of the incentives or the changes that hasn't fully rolled out yet. We're expecting it in the next week. But what we do need to do from a technical perspective is go back to our rules and our systems and tailor them so that these types of loans don't error out. But if you were delinquent on student debt, you will be able to get a PPP within the next couple of weeks.
Okay, great. And one more question here. How do I get help to pay the loan back if I was unable to retain employees?
You want me to take that? Anybody to take that?
Whoever.
So if there is an amount that does become a loan, at least under PPP, because it wasn't fully forgiven, as our other panelists mentioned, it's a 1%, it's a maturity of 5 years, and you actually get a 6-month deferment. Well, 6 to 10 months deferment anyway. So you do, once it becomes a loan, you don't have to make payments on it for the first 6 to 10 months. It just depends on what round you were in. So hopefully that gives you a little bit of wiggle room. If you still have a problem at the end of that 10-month deferment period, please work with your lender. They have some flexibilities in servicing, but hopefully that gives you a little bit more breathing room.
Ron, Tony, anything to add there?
I would just mention that there are also some economic assistance grants that are available through the state and through like the city of Lakewood that we don't have time to get into, but try to seek that type of assistance out too. It's not as broad-based as what we've been talking about, but there's, for small businesses, targeted towards small business. So there's some other assistance out there that you could be trying to avail yourself of.
Yeah, I think these two have it covered. That's about the extent of what I would add.
Okay, great. Well, we have reached 10 a.m. So I know this is a lot of information to get through. Again, all of the presentation slide decks will be emailed out to folks, as well as contact information and website links. And I hope everyone will join me again in thanking Ron and Tony and Francis for joining us this morning and for your expertise. So thank you, everyone. Have a great day.
Thank you.
Thank you.